Hilliard at Societe Generale. His career as an economist spans 35 years, including a 3-year spell with the Bank of England's Monetary Policy Group. These days, he's SocGen's chief UK economist. Thanks so much for coming in. Good to see you. So, 12,500, almost 12,500 we had, hike in jobless claims for the month of April. I mean, given that economists weren't expecting a change, this could be seen as something that is worse than expected. But you're saying there are holiday distortions at play here?
Indeed, I was going for 5,000. But the point is that with such a long span of bank holidays in that month, it was pretty likely there will be some temporary pause. So I don't view that as a trend.
So companies, it's not unusual for companies not to hire during a period like that. What about the trend going forward? When will hiring pick up?
Well, I think hiring is picking up, and it's interesting that the main ILO unemployment rate actually fell from 7.8 to 7.7%. I do think it'll rise by about half a point during the course of the year because the public sector layoffs will offset some of the private sector hiring.
Now, on April 21st, SocGen said that it changed its forecast of Bank of England to raise rates to August from May on uncertainty about the growth outlook for the UK. With this recent data that we've had today in mind, I know you said there are distortions there, but when we look at the general trends at play here, is the picture any clearer now?
No, it's not, and that's something that the MPC minutes point out. We've had all the detail from the inflation report, which shows that there are going to be distortions and uncertainty on the growth outlook right through to the end of the year. And the key point about that is it says, why should the Bank of England wait? They can't wait until the data are certain because they'll be waiting forever.
When are we going to get more clarity then?
Well, maybe 2012, but then we've got a Jubilee coming, so we're going to have more excuses. They have to act on the inflation risks, and they are very high.
So do you still expect a rate hike in August?
I do, with a little bit of risk later, but I think the most telling chart in the inflation report last week was that the probability of exceeding the target is above 50% for every quarter out to the target horizon. It's only at the target horizon that that probability falls to 50%. That's quite a damning view of their own forecasts.
But then how much do rates need to rise by in order to bring inflation under control, given that it's double the Bank of England, the government's target right now?
They need to rise gently up to about 4%, but that's going to take several years.
Is it being driven by temporary factors?
It is, but the underlying rate is still far too high. And in fact, I think the inflation target is too low. I think there are medium-term factors at play here. Globalization is no longer a force for deflation, it's a force for inflation.
And yet, despite rising inflation and energy bills, wages are not rising, which means that people have less to spend.
That's true, and we're going to see a very, very weak year for consumption, but net exports will pick up a little. But we have to expect that growth is going to be pretty weak for several years, but the inflation pressures are high, and they're going to stay high.
For how long? When are we going to see price pressures start to ease off?
Well, they'll ease off sometime next year, and certainly in terms of the headline inflation rate, there should be a big fall because the VAT effects will fall out of the calculation. But it's only towards the end of 2012 that we will see them approaching the 2% level. I
mean, judging from what we've seen over the past few months, a great deal of volatility in the commodity markets. Yes, they fell back a bit, and we had, ECB President Jean-Claude Trichet saying, listen, this is a good thing for inflation. There's still a lot of debate and uncertainty about where that could go and how that's going to impact on inflation. How can we be certain that inflation will indeed fall back to the government's target in a couple of years?
We can't be certain, and the Bank of England isn't either. And I think Ben Broadbent, the latest member of the MPC, made a good point yesterday, saying that we tend to be saying at the Bank of England that the commodity pressures are temporary, but there's really a trend change taking place here. The emerging world is hungry for resources and is going to be demanding more and more commodities through time.
You said that the outlook for growth remains very uncertain. You say that consumer spending is going to remain weak throughout the rest of the year. Can the economy handle, can people cope with higher borrowing costs even if it is a gradual rise?
They can, and it's not just people you have to look at, it's companies. Large companies are cash rich. They have no problem with financing at all. Small companies, that's a lasting problem which will not be affected.
Is that part of the problem, the fact that they're sitting on a lot of cash instead of spending it?
Indeed.
Large companies.
It is, but I mean, it's good for the health of the economy, but they can hire more as well. So large companies are not the problem, it's small companies.